Hi everyone, let me just read this out to you. Newton invested in the South Sea Company, which rose from £128 to £1,050 in early 1720. Okay, but sensing, and that's Sir Isaac Newton, but sensing the speculative nature of the move, he sold his £7,000 worth of stock and commented he could calculate the motions of heavenly bodies, but not the madness of people. He was right. By September, the bubble burst and the company fell 80% from their peak. However, in spite of what he said, Newton urges got the better of him. It turned out as the shares continued to rise, he bought back in and bought more than before. So when the shares fell back to earth, he lost £20,000 or £2.3 million of today's money. How many people has that happened to? How many people do that time and again? They say, I made a bit of money, I'll take it out, and then they see it rising, they get FOMO. Basically, they don't have a strategy, they don't have a direction. Let me continue along this vein. Take the stock market. From 1925 to 2015, it turned $100 into $31,000 even after inflation. But if you surveyed investors during any of that period, they wouldn't have been so happy, because let's look at how those returns were generated. 58% of stocks did worse than money on deposit, and only 4% of stocks accounted for the market's entire return. 4% of stocks. Naturally, you might say, great, I'll buy and hold those 4% of winners. Not possible, because we don't have hindsight. So what does that tell us? Well, the index as a whole, or a broad range of stocks, or diversification was an answer. Take Amazon. Amazon has grown more than 100,000% since it listed, but along the way, it fell 95%. Over 50% 6 times, 15% 100 times, and 6% in a day, nearly 200 times. Chances are you gave up thinking it was a winner each time it halved your money. Again, put another way, in this case, if we believe we've got a strategy, we hold through the tough times. That's the message there. So the message from the previous one was diversification. Message from this was have a strategy, stick to it, as long as the strategy is sound. And from Newton was, hey, if you don't have a strategy, you'll get blown into things which aren't relevant. Finally, look at this. Most of what you read urges you to do something, buy this, sell that. But in the real world, it's often what you don't do that's more helpful. As Charlie Munger, Warren Buffett's right-hand man, said, it is remarkable how much long-term advantage people like us have gotten by trying consistently not to be stupid instead of trying to be very intelligent. That's actually the case. We investors, our main job is not trying to be cleverer than everybody else. It's to be less stupid than everybody else. Now you might think, no, that makes sense. That does not make sense. We spend most of our time sitting on our hands. Once we've got the right strategy, the right pick, diversification to allow for the fact that we're not going to find the one single winner, and a strategy that we will therefore stick through, as opposed to having no strategy and following momentum and the next fad, then we leave it well alone. Our job is to try not to be stupid. What is stupid? Stupid is no strategy. Stupid is chasing momentum without a strategy. Stupid is a lack of diversification, but without a strategy on top of that. Okay? That's what actual investing is.